We are on with our friends and favorite lender, Jodie Tanga from Pacific Rim Mortgage. She's also known as the Mortgage Genius. Jodie, welcome.
Thank you.
Welcome. So, so we started doing these Friday afternoon Facebook Lives. You know, you always hear Jodie and her Mortgage Genius tips on our radio show. So now you get to put a face behind the knowledgeable voice.
How's it going?
It's going. Yeah. It's going. It is busy. We were just talking before we had got on with you just about how crazy things are right now with interest rates and inventory and I just want to point out too, while we're waiting for people to hop on, if you do have any questions for Jodie that are mortgage related or market related or real estate related, just make your comments and we will respond to them live.
There's Brother Derek right there.
And sister-in-law, Lisa.
And Lisa. It's a family business. You guys are very close. Very family friendly, very you guys work well together as a team. I'll say that for sure.
Thank you. We love working with each other.
Now, last time that I went to your office, it was a little while ago. You had the baby area with the mother-in-law helping. Is Dash still at the office?
Dash is
mama work.
Dash comes and goes a little bit more now, so he still comes at least once a day. And he's here for a couple hours a day, but he's not here like all day like he used to be.
How'd you come up with the name?
We wanted it to start with a D, and because Dylan, our oldest, is a D, and then we wanted it to be a verb. So there wasn't that many there really wasn't that many names that we could think of that fit what we were looking for. And then we kind of also were hoping for one syllable. So really it was the only one that fit all of the criteria.
Well, it's kind of like he's part of the Incredibles family, right?
Yeah.
You guys are like the Incredibles. You're like the Incredible Mama, right? Just running a business, you got your 3 kids, and you're still able to see them through the day. They're able to watch you work, and then they're alongside you doing their work. So just want to commend you for that. Yes.
Local. You know, Jodie, my 12-year-old Angelo, his first name is is Dash. My 12-year-old's first name is Dash, and so we couldn't figure out what to name him when he was born. And I wanted Giovanni, and Regina wanted Angelo. So he actually has a hyphenated first name. So it's Angelo Dash Giovanni.
Cool.
My son has a Dash in his first name too. But anyway, so the family, you got your brother involved. Let's take it back to the beginning.
And her sister and her sister-in-law.
Sister-in-law.
Yep.
And the pets and the kids and mom helping out watching the kids and all of that good stuff. Take us back to the beginning. Why did you get into the mortgage business?
So, super cool story, which is I met someone, honestly. I met someone when I was in graduate school, and he owned a handful of branches of a mortgage company. And when I was in graduate school, my mentor told me that, you're going to want to create something. He recommended that I try to start a business versus getting into the corporate world. And that's because he knew me and he knew my personality. And so that's why he told me, you got to start something. And then when I met Stan, and he was sharing so openly about the mortgage industry and about the business and about how amazing it was as long as you were willing to put in the work and do the grinding, that's when I kind of put an idea in my head that I think that's what I want to do.
So Jodie, what year was that when this all started to kind of come together?
So that was 03, 04.
All right. And then here we are in 2020.
Yeah.
And we had a comment from Michelle just say, just kind of tying into that the mortgage industry has changed so much just over the years. So
much. It's when I started Pacific Rim Mortgage, there was still the CISA, which is stated income, stated asset loan. At that time, Countrywide was one of the big giants that we brokered a majority of our loans to. And so there was a system on the Countrywide portal that allowed us to run an approval, and it would spit out a finding that said, yeah, they qualify for stated income, stated assets. And so literally we could submit a loan with just the title work and the credit report, and of course the appraisal. And that's all we needed to get to the closing table.
And then what are we at here now? Here we are, fast forward to 2020 with COVID. It seems that rates are amazing. However, there's a little bit more, a lot more due diligence that the lenders or the banks are wanting. So talk a little bit about that. What's changed with COVID?
So the biggest thing that's changed in terms of that is going to be, I definitely think that the self-employed borrowers, both trying to refinance and purchase, have been impacted in the biggest way. And we actually just got some new information regarding self-employed. And that's going to be previously we would just be able to take averages based on the 2 years most recent for a self-employed income earner. And now there's just an endless amount of rules to make sure that the income coming in is still consistent with what they were averaging in the previous 2 years, which is highly unlikely from a realistic perspective. So that we've been struggling with that for the self-employed. For a normal W-2 salaried person, it's been pretty great because all they have to do is prove that they've returned to work for a 30-day period and that their pay is consistent to what they were previously making, even though we know that they had that gap. Then it's fine. We can still proceed and there's not much of a hiccup. Another change that's been pretty detrimental to our VA buyers, which you guys and us alike work with a lot of our VA buyers, some lenders are setting FICO score requirements. So not all, and it depends on overall profile. And what I mean by that is, like, if your debt to income ratio, the amount of total debt you have, including the new mortgage versus divided by your gross income, if that's still low, then oftentimes your FICO score, your credit score, is going to be okay even if it's a little bit lower. But if that debt to income ratio is high, whereas in the past, pre-COVID, it's still okay, now we're seeing, like, no, they have to have at least a 680, or I think like in March it was like at least a 640, and then in April, May, it was like at least a 660, and then now some lenders are even coming out and saying at least a 680. And so that is just fluid and changing every day.
Yes. So it's just like they're becoming a little bit more conservative given the economy and the high unemployment rates.
Yeah.
Right? So that's a given. Let's let's shift over a little bit, because I know it's interest rates are amazing. People want to get into the market. Now, what kind of advice would you have for someone that has a 640 credit score or a 620 credit score? What can you do to help them get so that they're qualified?
So part of what we would want to do is, first of all, talk to them about what realm is going to work as is. So yes, your score is a little bit lower than we would have wanted, but here is what's going to work if you do nothing just as is. And that might require some sacrifices in terms of, well, we really wanted a single family home, and in the price point you're telling us, we're never going to be able to get a single family home. So then it's the decision of, okay, well, is a condo or a townhouse going to be able to meet your needs, at least for the immediate, maybe immediate to medium term? And if the answer is absolutely hard no, there's no way, shape, or form, I have 5 kids, there's no way, it's not happening, then we have to move towards more of a coaching situation where we assess the credit score and simulate things that we can work with them to get done, which of course might take some time, but still it's moving towards that goal of, okay, pay off this, and this. And sometimes it's even creating debt. So if you go and get a secured credit card and pay off A, B, and C, then in that time period, your credit score should go up by enough, and then we're going to be able to revisit a higher approval amount.
So now everybody has a unique situation to them. Do you have any, I guess, just general success tips on helping you with your debt to income ratio or your credit score? What would be your top 3 tips for anyone that's watching?
My first tip would be to get over the hump of not wanting anyone to take a look at your credit. Find someone that you're going to trust and that you like and that you know is going to give you service, and then let them take a look at it. Because if we don't get to look at it, we're just going in blind. We're just guessing, and it's literally guessing. So that's number 1, is let someone that you trust look at your credit. That means pull your credit. And that's a really hard stop for a lot of people, because they're like, I'm working on building it, so why would I let you pull it? Because that might impact my score. And so the reality is we need to do it so that we can help you get to where you want to go. The other thing is going to be things like keeping your balances on any of your revolving debt. So that's going to be credit cards, keeping those under 30% of your overall limit. So if your credit limit's 1,000,
it's got to be 300 or less.
Never
credit.
Just never have it over 300. Just don't do it, because then no matter what date of the month that liability holder reports to the 3 credit bureaus, no matter which date it is,
you'll be above.
You're always going to have that nice access to credit, which is what the algorithm is looking for. It's saying like, okay, they use it responsibly, they make their payments on time, and they're not maxing it out, meaning they're not at 100% utilization. So that's an immediate plus on your credit score.
And I missed it. What percentage should they have available?
30. You got to keep it. You can't exceed 30%. So if your credit limit is $1,000 on that credit card, you never want to carry more than $300 balance. Otherwise, that can affect your credit score. So just keep it at the 300 or below.
The other thing to note, which a lot of people don't know because it is a little bit counterintuitive, is don't close credit cards. So some people, they'll call me, or I'll call them, and they'll say like, okay, well, now we're ready to talk to you because we just paid off all of our debt and we just closed all our credit cards. And it's the worst thing that we could hear. It's so painful, because what you did was you ended the payment history that the algorithm literally generates a score off of. So even if some people are like, no, because they charge me an annual fee and they make me so mad because they didn't tell me about the annual fee, bite the bullet. Know that by closing that account, you're hurting yourself more than you're hurting Hawaiian Airlines, like the whatever.
And it's worth that little annual fee, right, while you're trying to get qualified for a loan, right?
Yeah.
So just deal with it until you get that approval, that loan approval.
Recapping, do I have it correct? You got to pull the credit report. You need to make sure that You're leaving 70% of your available credit line unused.
Yes. Yep.
Don't close credit card accounts or revolving accounts. Don't close those revolving
Leave
accounts.
them open and pay those annual dues. Just
And
pay
what?
them
And
until
then
at least until you got your loan.
And don't go buy one truck.
Yeah,
I
don't
mean-
incur new debt. That's helpful.
Don't go furniture shopping or buy a new truck. So we've got a question from JT. He says, are there loan programs that don't require current tax returns and can use the 1099s or W-2s, or just income verification and you have excellent credit?
Like a low doc loan or something.
Yeah, she's showing like you got perfect credit and high income for 1099. You do that without tax returns.
There are. Most of the ones on the market right now are for an investment purchase.
Okay.
So if you want to own or occupy the property, then most of the time there is not a loan that you will not need to produce your taxes, specifically as a self-employed person. I'm assuming this person is self-employed. Yeah, there are other cases where, of course, you don't need to give taxes if you're a W-2 person, but that's totally different. Now, I was just on a little webinar 2 days ago that said that there is a lender, that's a wholesale lender that's coming into the market that's going to have these owner-occupied stated income loans. So that's right on the horizon.
So generally, what does that mean? Does it mean it's going to be a higher interest rate or just higher like qualifications as far as the credit scores or income verification?
Definitely credit score requirements. I mean, and my assumption is going to be that definitely going to be a higher rate than if you were going full documentation.
Yeah.
So that's going to be but for most people, most of the people that I talk to, they're like, we won't mind. We won't mind if it's going to be a little bit higher as long as we're able to buy or to refinance. So that's coming on the horizon. It was very exciting, and they weren't able to give as much information or detail as I was hoping for, but they are coming back. So the stated income loans are coming back for even owner occupants.
What do people need to know about teaser
The teaser rates.
And here's my definition of the teaser rate.
A person who won't go with you to the prom.
I'm just kidding, but it's just a situation where it's this on the front end, and then what do we need to know about those teaser rates? What is a teaser rate?
So a teaser rate to me, I instantly think of a home equity line of credit. There's a lot of home equity line of credit programs where you will get a teaser rate of 1 or 2%, but it will only be that rate for a limited time, such as 12 months or 24 months, and then that rate will change. So to me, the thing I hear most often is definitely a teaser rate associated with a home equity line of credit. However, there's also the teaser rate that is going to be on that junk mail, I would call, that you may get in the mail. Or the newspaper. And so you see these rates, and it's crazy, because I just had one of our buyers actually give me a call, and he read me the fine print, and so it said 2%, or it said as low as 1.75%, and so he was like, I want to do it. I want to lock in a 1.75%. And so I said, no, that there's not a 1.75%, Tony. And then he goes, I said, read me the fine print. So he's reading it, and he's like, if your FICO score is anything under an 850, and if your loan amount is anything over, I think it was like over 250,000, which his loan amount was like 600,000. And then it said, and if you subject to points up to 3%. So 3% of 600,000 is $18,000 in
Wow.
fees. You know, so it's basically, it was like they come up with this laundry list of things that is never going to happen. And so you call and you get hooked and you say, yeah, I'm calling because I want the 1.75. And then they're like, awesome, let me get your information, work on the qualifications. And then they're like, oh yeah, okay, so here's the 3%. And you're like, no, I wanted a 1.75%, but oh no, sorry, because you don't have this, and you didn't have this, and you didn't have this. So that's also what comes to mind when I think teaser rate.
Yep. So read the fine print.
Read
Right?
the fine print is the takeaway, because you know, everybody hears that it's too good to be true, and most likely with teaser rates, it is, because you got to understand what are the implications of that. Because it's marketing, it's a call to action. It's trying to get you to pick up the phone and have a conversation. But you know, a lot of times, Jodie, you know, people come to us with like already made the decision. What we're telling our viewers is don't make the decision and then call Jodie and it's too late. Like,
call her now.
Tell her now.
So we've got a question from Michelle over in Seattle, Washington. She's interested to buy a second home and make it rentable, like an Airbnb. Is there any special loans for that?
So, no.
No special loans.
No, and they're extremely difficult to get financing on. So we have a buyer that's looking to buy in now.
Are you meaning like a condotel? Like there's the condotel model, and then so she's looking to buy an Airbnb or like maybe a vacation rental, or you know, she just made a comment. It would most likely be like a second home loan, where maybe she could use it for part of the year and then have it rented out for part of the year.
And is
there availability for that?
Well, before we even go there, let's give a reality check with vacation rentals versus short term. First of all, vacation is less than 30 days. Short term is less than 6 months. Long term is 161 days or more.
So depending on the area.
Well, vacation rentals, they just came out with a law 2 years ago, creating humongous fines. They're so humongous, we call them humongous. And they're huge. And not only does the owner get fined, but the realtor marketing it can get fined. So probably 80% of all of that stuff got shut down. So
there are some areas that you can do the vacation rental. I mean, they're just not as many as before. But yeah, for a second home loan, what kind of programs are out there right now?
Well, the last thing per the governor's proclamation, all of those are shut down, legal or not. Unless you're in a motel or hotel zoned building, those are the only people that can do vacation rentals right now on the island of Oahu. Continue.
So for second home is amazing. Second home, you could do as little as 10% down. And as long as you can qualify, you're going to get the best interest rates. The same as if you were going to own or occupy. So second home's amazing. What I was more speaking to is going to be an example will be Kuilima Estates by Turtle Bay. So those, from my understanding, allow short-term rentals. And so from a lending perspective, if a condo project is allowing short-term rentals, you cannot get conventional financing, period. Yeah. So that means we have to go to the local banks like Bank of Hawaii and reach out to our platform there and say, hey, are you guys lending on Kuilima Estates? Is this something you guys can do?
And so it's going to be a portfolio loan, or maybe even doing like a private lender.
What kind of percentage down are we looking at?
So for a Kuilima Estates type situation, even though it's going to be used as a second home, we're looking at a minimum of 20% down.
20%, okay.
Okay, so it really depends on the location and the situation. It sounds like second home is the way to go.
Yeah. So, I mean, Fannie Mae and Freddie Mac do not like it if you can utilize the property as a short-term rental.
Yeah. Let's, you talked about it on the show because we want to make this as relevant to our current situation as possible. Forbearances. What do people need to know when their loan is in forbearance?
So if you want to refi,
yeah,
your loan will not be in forbearance.
You'll be like,
it's just,
sorry.
Listen, you're saying, I have a 4%, I want a 2.5%. And I am good for it, and I will be making payments. You can't say that if you haven't been making the last 3 months of payments. Even if it's like, well, they called me and they said I might as well take advantage of it. That's great. They said you might as well take advantage of it. Now, if you want to close on your refi, you have to get caught up. It's the same as rent, because now that the forbearance on renting isn't going to get extended beyond today, now if all those people don't get caught up, they can get evicted.
Yeah, you mean the eviction.
So if you are in that situation and you're renting, they're actually, like Duke had brought up, a great program through Catholic Charities Hawaii, and they have a ton of money and sources for you folks that are in that situation. If they don't give it out, then they're going to lose it. So,
well, it's the
contact
classic
Catholic Charities if you're behind on that rent.
It's the classic. You can't have your cake and eat it. You can't be not making mortgage payments and then expect to refinance into a lower interest rate. I did a guinea pig experiment on myself. I clicked a button and I just said, oh, let's try out this forbearance out of my phone. Literally, I clicked this button, clicked 2 things, boom. I didn't make a mortgage payment since, April, May, June, July. But I have a super low mortgage payment, and I want to be able to speak to people on this, whenever I'm speaking, not anecdotally, but from firsthand. So it's super easy to do. Now, when I reinstated it, I did apply for a refi, and I think I got denied, and they didn't say, but I think it was because of my forbearance. I didn't need the refi.
Pretty sure.
Again, doing guinea pig. So Attilio has been the guinea pig for you guys. I've been the lab rat for all of this. And so then I just reinstated it. I went online, and then you got to make the payment. But I would tell you, go back, because I thought it was done on the 16th, and I went back yesterday, and it wasn't done. So I had to literally get on the phone to get them to force the payment to go through. So I not only caught up with my back payments, but then I made the next payment just to make sure it's done. But they kept saying, oh, you can just do that online. It didn't work online when I tried it, because even though I made the payment saying I was caught up, it was still telling me I was behind. So
double check, even though the payment goes through.
Yeah, and verify.
You click the button or you send it through. Doesn't mean that the bank has taken it and applied it.
Well, think about it. This is all new stuff for the banking industry. So even all their coding and their software and all of that, it's all new. So you got to make sure that a human being is double checking that it's actually getting done. That was my first-hand experience in the last 48 hours with the forbearance.
Yeah.
Okay. Well, let's wrapping this this lunchtime live event with Jodie Tanga, the mortgage genius, up. Any final parting words for our viewers or
advice
you wanted to touch on today that we didn't get to talk to?
Well, I just did want to, make mention to everyone that because interest rates are so low, obviously there's a lot of people trying to refinance. There's a lot of people trying to purchase and trying to get qualified. I think that no matter where you are in terms of your ability or your readiness, it's going to be a good step. If it is a goal to purchase, if that is something that you're hoping to do at some point in time, whether it be to this month, next month, or a year from now, it's a good idea to take that first step, even though I know it's super scary, and get assessed on where you are. And that's going to help you to know what needs to be done in the future, what needs to be done now for the future. So that would be what I would say. We want to help you. People want to help you get to where you want to go, even though you might not be ready right now.
So don't assume, ask, get advice. There's a lot of new things happening. Ask for help. So last thing we want to leave you with is if you just said, man, I just can't get enough of this Jodie, the mortgage genius. I need more. just tune in every Saturday, AM 8:30.
So tomorrow, you can tune in tomorrow and get more of Jodie.
We even gave you the real time to check in because there's about 7 minutes of commercials before we actually come on air. So from 10:07 a.m. on AM 8:30, you can also listen to Jodie on our radio show on the iHeartMedia app if you're out and about. You don't need to be next to an old school radio. And that's it. Mortgage Genius. Man, my IQ just went up 5 points because I was in this conversation with Jodie. So listen to the radio show so you can be more smart.
That's right.
That's it.
Thanks, Jodie.
Thanks, Jodie.
Happy Friday.
Happy Friday.